the dollar yen is forming a potential 2,500 pip pattern on the higher time frames that you're not going to want to miss. We'll have the details in today's video. We'll also talk about short-term levels to watch next week, as well as an update on the yen index as well as the dollar index. Okay, so kicking things off here with the dollar yen daily time frame. These are all levels that we've discussed in the past, but it's important to go over them again because we are seeing the dollar yen start to base above 148.35, which you can see that we got a little bit of a deviation through here, but for the most part, this level is holding up relatively well. So on the daily time frame, it has held up relatively well since September of last year, and so a weekly close above this puts pressure on that 149.70 area, these highs right back here. But more specifically, though, we have to start entertaining the possibility of a move back here toward that 2022 high, which was also the 2023 high, up around 152. All right, so we'll talk about the price action for next week later in this video, but today I really want to focus on what's happening on the higher time frames, specifically the weekly chart. And if you look at the weekly chart here for the dollar yen, what you can see is that we clearly have higher lows since back here in 2022. All right, so even through this period, we had higher lows for this pair. And since the period back here, just at the start of 2022, we do have a trend line off of several lows here. And then we also have resistance up here at 152, that macro high, which was, again, the 2022 high as well as the 2023 high. All right, now those familiar with ascending triangles know where I'm going with this. What you can notice here is that since this low, we have the combination of this ascending level here, and then we also have this horizontal resistance up at 152. So a lot of times when you get a pattern like this, what it's signaling to you is that the market is likely to eventually continue with this trend, because even though we've had higher lows, the market has been capped below that 152 mark. Okay, now there's no guarantee that we do get a break higher over the coming years. However, this is a potential bullish pattern. Now, confirmation of it would occur above this 152 area on the higher time frames. And because this pattern goes back several years, we're talking about the weekly and monthly charts. And we'll take a look at the measured objective of this pattern in a moment, and I'll show you why it's so incredibly interesting, because it does line up with a level that goes back decades. However, first, let's take a look here at the recent price action. And I'm really starting to think, guys, that we are likely to see a move back toward 152 from the dollar yen as long as it stays constructive here within this short-term uptrend. So as long as we continue to see these higher highs and higher lows within this, I do think that a run back toward 152 has to be something we seriously consider. And that's because anytime you start to see a market getting above the last fib within a series like this, so if we draw out our fibs, you can see where the market's coming into that last significant fib right there, the 786, which it's running into right now. Now, we can also see that the market is struggling with some of these lows back here. All right, so again, right around that 149 mark. This is going to be resistance. However, if we see the dollar yen climb above this area over the coming days and weeks, then a move back toward 152 seems likely, just given the fact that the market is or would be so close to that level if we get the break above this resistance area. All right, now let me show you why the objective of this potential ascending triangle is so interesting. And again, this is a potential pattern. There is no confirmation here just yet, so that is important to understand. Now, the way that you find the objective of an ascending triangle is you take the height of the pattern. So in this case, guys, it's a little bit different, and there's varying opinions on the base of a pattern like this. So typically you take the base of the pattern and you measure higher toward the resistance up here. However, in this case, what I like to do, because we don't have a high back here, if the market had formed this pattern like this, okay, with a high back here first, then this down here would be your base. But what I like to do, if we don't have a high back here, and this is your first high, then to me, this is the most logical base of the pattern. All right, so when we look at this, right, if this is our base of the pattern, what we do is we take the height of this from these highs up here and measure lower to the low down here, okay, so early 2023. And if we do that, the easiest way to do that, if we're on the linear chart, the easiest way to do that is to take a trend line and hold down shift from the lows down here, measure higher up here toward this point. Okay, so that gives us a range of, should be approximately about 2,500 pips. Yeah, so you can see it's about 2475. And so if we take this level then and copy it over, move it up here, right? And it doesn't really matter where you put this because this is a horizontal level. So if we just put it somewhere over here and try to line it up with that level as best we can. Okay, so you can see that that's lined up pretty well there. And then come up here and take a horizontal level and draw it right across that high. All right, so this up here would be the objective of this ascending triangle if we do get the breakout over the coming weeks. Again, it's going to take a sustained break above this in order to secure the breakout. All right, but if we get that, what's really interesting about this, you can see we've got 176.56. And again, this is an approximation, right? So we know that this is going to be an area of interest, not just exactly 176.56, but that general area. And now what you'll notice is if we head over here, let's go to the monthly chart, go all the way back here toward the 1970s. What you're going to notice is that we have a low from 1978, guys. And that low comes in right around 177. So literally 50 pips from the level that we just marked. And again, this is going to be an area of interest if we were to get the break higher over the coming weeks. Now, what's even more interesting about this is that you can see that if we zoom out here on, let's go to the 3-month chart. All right, so you can see that this low back here from the 70s was obviously very prominent, right? Because this was about a decade move lower, and then we got another decade of rally and consolidation through here. So this was a very prominent low for the dollar yen, but what you'll notice is that once the market broke down through here, we have not seen a retest of this level as new resistance. Now, I get that I'm talking about very high time frame charts, guys. These kind of moves are going to take, potentially years to play out, right? So this is not something where you want to go buy the dollar yen and aim for 177 and just hold the trade, because you could be in that trade for 2 years. However, this is also significant because if you can get yourself on the right side of a macro trend like this, if it does play out, then you stand a much better chance of profiting on your trades because you're going to be with the momentum. All right, so you can kind of see here over the past few decades, ever since the 1980s on that breakdown, you can see where the dollar yen has carved these lower lows back here. However, recently we do have these higher lows that have developed and also higher highs. All right, so you can kind of see this rounded bottom pattern here for the dollar yen. And this through here is, of course, that ascending triangle that we just looked at. Okay, so knowing all of this, knowing that the objective of this potential ascending triangle comes in around 177 and that also lines up exactly with that 1978 low, I find incredibly interesting and something that could indicate that the pair is about to move 2,700 pips higher. Now, why 2,700 pips? Well, the market is below 152 right now. So if we were to get the break above these highs up here over the coming weeks, then, from current levels, this area up here is about 2,700 pips. It's 2,500 pips from 152. All right, but again, I can't stress this enough though, guys. The key for this longer term move, for this move that could take months or even years to play out, is going to be a sustained break above this area up here. The market has to take out these highs to confirm this as an ascending triangle and open up that objective around 177. All right, now let's flip over and take a look at the yen index. And if you guys are enjoying this content, be sure to smash the like button, subscribe to the channel, and click that bell icon for notifications. All right, so the yen index, this is something we've talked about before as well. It's no surprise that this is essentially the inverse of the dollar yen. And that's because the dollar is a main driver in this index here for the yen index. And what you'll notice here is that we have pretty much the inverse of what we just saw on the dollar index. Okay, so we have this trend line off of these highs from back here. Now, it did kind of look like at the end of 2023 that we could get a break above this area up here, in which case this would have just been one big range trade for the yen. However, with the market now coming very close to this macro low down here, again, from 2022 and 2023, we have to entertain the possibility of a retest down here. And if that happens, then there is no higher low here. Okay, so then you have to start entertaining the possibility of this being a descending triangle, where over the coming weeks, we could get something like this. And again, this could take years to play out, guys, for all we know. But it starts to look a little bit more bearish if the yen can't form a higher low here over the coming days. So the market's at a pivotal point right now where it's going to have to decide, is this going to be a higher low? And we get a return back here toward the resistance level, in which case that would be bearish for the dollar yen. Or are we going to get another test down here at this support level, in which case it starts to look a little bit more bearish. All right, still above support, but it would start to look a little bit more bearish overall because, again, it would indicate that the market was unable to form a higher low. All right, so next up, let's take a look at the DXY, the US dollar index, because that is going to matter when trading something like the dollar yen. And if you guys want to join us in VIP, which includes real-time discussions, daily videos, the course that's coming out, Plus, you'll see my trades in real time. Be sure to see the link at the top of this video, guys, for 70% off VIP access. So click on that link and join us today if you do want my help with your trading. All right, so looking at the DXY, these are all levels we've discussed in previous week. So if you've watched this channel for a while, you should be very familiar with all of these levels, including this area up around 104.45, which is where the DXY is struggling this week. So as of right now, guys, I am still bullish on the dollar. And the reason for that is because we do have these higher highs and higher lows back here ever since the start of 2024. So if you'll remember, this is where I was turning bullish on the dollar. We had the reclaim here at 101.90. We had the reclaim up here above 102.60. And more recently, okay, we've had the reclaim up here above 103.50. So as long as we're continuing to make these higher highs and higher lows, I am going to stay bullish on the DXY. Specifically, 103.50 is the level that now has to hold. If we were to see the DXY trade below this, then I would turn bearish on the DXY. However, again, the market is still making higher highs and higher lows, but it does have to take out these highs back here. And this is what I've said repeatedly because this was the last significant swing high during this move lower for the DXY. So if this trend is going to continue this year, the market has to take out 104.50. It has to close up here, okay, a sustained break up here to really flip the momentum from bearish to bullish. Now, speaking longer term, right, referring back to that dollar-yen weekly chart that we just looked at, what could push the pair higher above 152 over the coming weeks? Well, we know that the market has potentially some unfinished business up here at 109 to 110. So this is something that I've maintained for a while, right? And there's no guarantee that this happens. Remember, this area up here, which you can see, again, this is where the DXY is struggling. It has to get above these highs back here to open up levels like 106, all right? This fake out that we saw back here at the range highs. But what could push the dollar-yen above 152 potentially? Again, this is potential. We don't know what's going to happen. But this area back here, right, this candle that I've talked about a lot here on the weekly, you can see where we got a very shallow retrace of that candle. And a lot of times when you get a very large candle like this, especially on the weekly chart, this area up here tends to serve as a magnet. Now, we didn't see it retested back here during these highs. So if we start to see the DXY taking out 104.50, all right, basing above these highs back here, then that could be the catalyst for the move up toward 106, at which time the dollar-yen could be around that 152 mark. And then from there, if we see it get above this area up here, right, and especially above these highs, then 109 to 110, that could really set the dollar-yen off on a bullish move. All right, so that's what to watch for here on the DXY in terms of how it would impact the dollar-yen. But again, we don't know which way this market's going to go, and it's still below resistance. So like I always say, you don't want to be getting bullish on the dollar through here, right? If it gets above this, then yes, that would be a bullish move. However, the times to get bullish here were on this reclaim through here, the reclaim above 102.60, and then following this right here above 103.50, right? So those are the times to get bullish, but right now you've got to be careful because the DXY, the dollar index, is still below that 104.50 resistance area. All right, so let's wrap up here with the dollar-yen. Okay, so we're going to talk some short-term levels right now because I know that all the stuff we've talked about so far in this video is longer-term stuff that could take months to play out. So right now, guys, we obviously have an uptrend here for the dollar-yen. However, shorter term, you can see where the market is coming into some resistance up here. So these highs from right back here, right around 149.70. So that is going to be resistance. The dollar-yen would have to close up here sometime over the coming days to flip this area to support and expose that 152 area. And support for the dollar-yen is going to come in down here around 148.35. So again, you can see we had a little bit of a deviation here recently. What we can conclude is that this general area back here is going to be support for this pair. Okay, so really anywhere between like 148 all the way up toward about 148.50. This is going to be support for the dollar-yen going forward. A close down here would be bearish. A close above the area right around 149.70 would be bullish toward 152. I hope today's video has given you some crucial insights on the dollar-yen, specifically where it could be going over the longer term and also what to expect next week. If so, be sure to subscribe to the channel, guys, and click the bell icon for notifications. Don't forget to smash the like button and claim your 70% off lifetime access to VIP. I will talk to you all tomorrow in the weekly forecast.